everyone. Welcome to Digital Banking Work in Progress, where we discuss and seek answers for all types of challenges and complications of transforming banks to digital. This is where I get to speak with leaders in banking, banking technology, as well as regulators, and learn their unique perspectives on the various aspects of digital banking. And in today's episode, we are going to talk about a topic that's very close to my heart, which is open banking. I'm honored to be joined today by Chris Michael, a co-founder and co-CEO of Ozone API, a technology company that helps banks implement and monetize open banking APIs. I like to think that there was a time when Chris Michael was almost synonymous with open banking regulation. This was, I think, at the height of PSD2 implementation in Europe. And Chris was heading technology for the open banking implementation entity in the UK. And that resulting open banking technology specification, technical specification, actually influenced many countries in their open banking implementation subsequently. So good morning, Chris. It's a pleasure to host you on my show.
Good morning, Sashika. It's fantastic to see you again. Thank you very much.
So, Chris, just looking back at the time when you were in the seat of the regulator, I think it's a bit of a hot seat to be in, isn't it? Like it's not always easy to be the regulator. I'm curious to know what was the most difficult and challenging thing about being a regulator.
Yeah, I suppose, I mean, technically, I wasn't a regulator. I was an independent contractor working for an independent organization, the Open Banking Implementation Entity. And we were set up to be, you could have called us almost like a pseudo regulator, in the sense that we were set up to create the standards and the framework for open banking in the UK. It was a really, really interesting and exciting time, actually. I mean, I felt very sort of honored to be asked to lead this kind of technology initiative, and it was challenging because there were lots and lots of unknowns. Nothing like this had really ever been done before, and I mean, I found that exciting and very very interesting project to work on. But the regulations weren't clear. So we were working with two sets of regulations: the Competition and Market Authority's competition remedy for open banking, which mandated the 9 largest banks, the CMA9, to provide open APIs. And we also had to make sure everything was in compliance with the Second Payment Service Directive, PSD2, in Europe. And at the time, the UK was still part of the European Union.
Yeah.
So we had to particularly follow what were called the regulatory technical standards, which weren't really standards, but more some technical rules, or secondary legislation. But those rules hadn't yet been written. They were still in draft. So we were kind of building something very new, and trying to follow regulations that hadn't yet been finished. And yet there was a looming deadline for the CMA9, these 9 large banks, to implement the APIs. But I think, what was really interesting and very rewarding, actually, was the process that we took was to, rather than tell everyone what to do or try and create standards in a sort of in a bubble or in a vacuum, what we did is we got everyone from the industry into a room together to talk about this. And we actually ran 200 workshops over a couple of years with banks, fintechs, technology companies. We worked very closely with the Open ID Foundation, with some of their members, to define the security model for open banking, which is now, as you alluded to earlier, I mean, not just the security model, but that was the key part of it, which has become effectively the benchmark or the base security standard for open banking around the world now. So yeah, it was kind of, we were doing a lot of things for the first time, innovating very quickly, but the key to it was to get people to collaborate on it, because at the time when we started doing this, and I'm sure we'll talk about some of this in a bit, at the time everyone was, most of the people, should I say, in the room were trying to do this for the right reason, even though the regulation was maybe a little bit sort of introduces a punishment to the banks. Most of the people in the room from the banks and from the fintechs were all trying to do the same thing. They were trying to help build and collaborate on building this model, this blueprint for open banking to deliver actual value to end customers.
Yeah.
And that was the key thing. And that's why I think we managed to build what is in the end a very good standard that, as you said, as we discussed, has become a sort of benchmark for other standards around the world.
Yeah, so I'm going to thanks for explaining that. I'm going to catch on to that thing you said about the value and the purpose of open banking. Now, as you said, there were the regulation perhaps was designed to fulfill many purposes, and each of the participants saw, different purposes around implementing and participating in an open banking environment. Increase competition, or better control of financial data, improve financial literacy, improve financial inclusion, just to name a few. But I think for me, I think that notion is shared across banks and fintechs as well. We felt that the real purpose of open banking was to really enable customers to consume better lifestyle experiences by sharing data. And in that, I guess the dream was that, data will be securely shared with not just the financial services sector, but with various enterprises in different industries, so that these combinations and these network effects can actually output really personalized, relevant experiences across the customer's lifestyle. But today, looking back at the journey that we've all come on, I think it's been over 4 years since open banking has been in force, especially in Europe. I feel that the use cases and the benefits of open APIs still kind of revolves a lot around the banking use cases. Sure, there's a lot of value addition, but still, I feel that we are still kind of revolving around finance and banking. And if you've seen some of the episodes of this podcast series as well, many of the banking executives that I've spoken to have said that they're disappointed with the implementation of open banking, and some have gone to the extent of saying that open banking was a failure. So, what are your thoughts about it? Why are we, after 4 years, not really close enough to achieving that kind of lifestyle experiences for our customers? And sort of in the same way, why haven't open data initiatives like, the Smart Data UK or the Consumer Data Right in Australia, why haven't they taken off yet and still seem to be, meandering around open banking largely?
Yeah, I mean, I think the first point is that that I firmly believe is that open banking is part of a sort of journey from open banking to open finance to open data. We've seen most markets that are looking at this start with open banking. Some of them are moving or have moved to more open finance, and some of them, like Australia, are moving to more of a wider sort of open data initiative. Yes. And effectively, as you move along that journey, you're opening up access to more types of data, to more types of participants that are involved in that process, and that provides more value to customers in theory. So that's the theory. The challenge is that this takes a long time. It's not easy, and particularly when we were starting this journey in the UK, there weren't many vendors around. There wasn't much technology that existed to help the banks. What many of the banks started doing is building their own interpretation of what their open banking API should look like. So they spent an awful lot of money and time trying to do it, and they were all trying to do their own version of the same thing, and that was, in the end, proved to be quite expensive and inefficient. But I think the overriding challenge here is that there's value there. Everyone can see the value. Banks can see the value. Fintechs can see the value. Regulators can see the value. But it's not easy to get that value. And if you spend too much money trying to create these APIs, and you underestimate you overestimate how quickly you'll get that value, the books don't balance. It's a business model that doesn't really work in the short term. This is a long-term play. It's not a compliance exercise that you spend a few pennies on in year one and then you're done and you walk away from it. And and I think a lot of people thought that would be the case. They thought, okay, how difficult is an API? We'll just build an API, and it's a lot.
I just think that the presence of deadlines itself kind of pushes you to think that way. That, I just need to kind of, comply, have everything ready by the deadline, and then I'm done, sort of thing. Do you think?
Well, definitely. I mean, look, deadlines are incredibly useful. If you didn't have deadlines, then nothing would happen. But I think when you look across the world, all of the markets that have implemented and are implementing open banking, what you tend to see is that there's a deadline and something happens by the deadline, but it's by no means the finished product. And the finished product takes, well, you're never finished, right? But it's a kind of incremental job to have better quality APIs, to have a better sort of more sustainable ecosystem, to have more fintechs in the market. It's an ongoing process that just takes time. So having a deadline is not what we've seen. Is it doesn't mean that everything's finished and done by the deadline. What it kind of tends to mean is that some stuff has happened by that deadline and a process has started. And then sometimes you have another deadline, as we've had in the UK. We've had repeat deadlines for different versions of the standard that open up new use cases and new value. But I think the other challenge we've seen here, and one of the reasons why some people say that open banking is failing, is that because it takes a long time. It's a long play particularly for banks to create and manage and keep updating these APIs. And if the banks are doing this and they're not getting value, then what the banks are worried about and the larger financial institutions are worried about is this continual ongoing spend and commitment to spend money without seeing the ton of tangible benefit. Now, there are different ways that banks can get benefit out of this, and it depends on the type of API. But I think thinking about charging per API call for access is one way of getting value, but I don't think it's the most exciting, most interesting way of getting value out of APIs. Introducing payments initiation APIs that offer an alternative to cards or other forms of payment, such as direct debits or standing orders. I think those things, you can charge a few basis points or a few pennies on each payment. That's something that, if you think about this replacing other payment methods that have got a higher cost, that there's an interesting value exchange there. But if the banks are pushed to do everything for free and keep doing more and more stuff for free, then of course they're going to push back against that. But really, I think what open banking is about is banks and fintechs partnering with each other to offer new services. And that's where it gets really interesting. And that's also where the competition element comes in. We've seen that already in the UK. We're seeing this now in the US. We're seeing it in Brazil and lots of different markets where banks and fintechs partnering together using the API channel to do that. And that's a more holistic approach. But not everyone's kind of in that headspace yet. But I think this is where the example that I remember, one of the big banks in the UK partnered with a fintech to build a lending product that they couldn't offer loans to their existing customers. Sorry, they could only offer loans to their existing customers because offering a loan to someone who banked with another bank was too expensive and too risky. So what they did is they partnered with a fintech, and it was one of the best early use cases for open banking. They partnered with a fintech to build a sort of enhanced credit scoring product that they could offer loans all of a sudden to customers who banked with another bank. And that was very successful because the bank benefited because they could open their book, if you like, to more and more customers. The fintech benefited because the bank paid them I don't know exactly on what basis, but the fintech benefited because there was a revenue model from the bank to do that. Well, actually, the bank also benefited because it was reduced risk and cost to them as well. That was another, not just opening the book, but reduced risk and cost. The fintech benefited, and ultimately, the fintech in question ended up selling their business to a larger credit reference agency who bought them. And that's great because the financial service industry as a whole benefited from open banking. But importantly, the customers benefited. End customers benefited because customers could get loans more quickly, at a better rate, and with you could argue so more responsibly as well. Yeah.
I think that's really important too. I mean, what I'm understanding is that while the dream and the benefits of open banking are more long term, I think it's important for us to highlight and showcase the short term benefits, to discover them even, and to kind of weave them into an open banking implementation, even from a regulatory perspective, to kind of evangelize those short-term benefits, so that, I mean, obviously banks are businesses, right? So they can't just keep pumping money into projects that are only going to show results in 5 years time. So I think that's a good point. Now, Chris, I don't think we can have an open banking discussion these days without discussing the CFPB's proposed rules on open banking in the USA. Now, considering the unique structure of the financial industry of the United States, what is your opinion around, what needs to be in place for open banking to really kick off successfully in the US?
So I think the US is really interesting here. So some people would argue, and I'm not necessarily saying I even disagree with this, that the US is the only market where open banking is already really working at scale.
Yes, yeah.
And that's, well, first of all, it's a very large market. The second point is that you've got inherent value from services that benefit from APIs, access to bank accounts. Obviously, we've discussed lending. Lending is a key beneficiary of APIs. I'm going to call it APIs, not open banking, because there's an argument about what's going on in the US at the moment. Is it actually open? Is it closed banking? But effectively, you've got a market where there's a large number of customers. There are use cases which are generating real value, whether it's lending, getting access to better credit decisioning for lending purposes. Business accounting is another huge one. If you're using a cloud accounting package, using open banking or using APIs to do your kind of account reconciliation to integrate with your bank account. And the other key one is financial management, so wealth management, particularly things like tax filing, tax returns. So customers actually pay for all of those services already, right? So they pay indirectly for credit scoring. Sometimes they pay directly for credit scoring, but they pay indirectly for credit scoring as part of getting a loan. So the customer is happy to pay some money, even if it's buried in the long-term interest rate, because they want a loan. Customers are happy to pay for a cloud accounting package because they need it to run their business, and part of that revenue will go towards paying for an open or an API feed to your bank account. Customers are happy to pay for an app which will help them manage their finances and do their tax returns. So these are three very valuable use cases that exist where the customer's happy to pay directly or indirectly for something which connects to their bank account. The middleman in there is the aggregators or data access platforms, as they're called there, Plaid being the largest. And there's a revenue model that Plaid will provide access to all of these bank accounts via a combination of APIs, screen scraping, direct integrations, and then Plaid will sell that access on to the fintechs who provide the end service to the customer.
Yeah.
And the Plaid will also pay the bank and have a contractual relationship with certainly with a number of the banks there as well. So there's a value exchange that kind of works for everyone. So one argument is, well, it's working. Why do you need to change anything? But where you've got a large number of banks, a relatively small number of data access platforms that that control the market, and there's paid access, it doesn't really help innovation. It doesn't really help new fintechs coming into the market to offer innovative new services. So I think the ruling is really interesting, and my very sort of top line interpretation of it is that, and by the way, it's still not actually a regulation. I think that's happening next year. So my very top level interpretation is that what it says is that the banks have to provide this access now free of charge to any authorized third party. So what that means is it doesn't allow for these data access platforms to charge, or for that to be the only way to get into the bank's APIs. It doesn't mean that data access platforms can't exist and charge for services that are additional, but there has to be a way for an authorized fintech to get access to a customer's bank account without paying money. The thing I'm not 100% sure on is, does that mean that it's also without having some sort of contract in place? That's a little bit, I think, certainly in my mind, I'm a little bit unsure on that. So can banks still put in place some sort of obstacle, as we called it in PSD2, where the bank requires a fintech to sign up to a whole load of other terms that might not have a cost involved? I don't know the answer to that. But the other thing that's really interesting is that definition of an authorized third party is someone who's authorized by the customer. So there isn't this concept of a licensing process for open banking. I don't know how much of a problem that will be in the real world, because there are still obviously other financial service regulations and data regulations that apply to any firm in the US and in the world for that matter. So actually, how much of a problem is that going to be? But I can see there being some potential concerns around fraud, around security, around data breaches, etc., if there isn't some actual specific licensing in place to protect the customer.
Yeah, I think, and in the long run as well, where we hope to see, more than just fintechs participating in these open ecosystems. I think the number of third parties or number of authorized parties to access these APIs will then increase. But I also think that, it's a journey as well, isn't it? So the banks will mature and the customers will mature along that journey to understand what this sharing of data means and how to kind of do that carefully. Chris, I mean, with all that is happening around open banking and different countries being, at different phases and levels of either implementing or participating in open banking ecosystems, how can we as technology vendors that actually enable open banking for banks, how can we help banks and fintechs do more with open banking and really sort of propel them towards that kind of ecosystem dream that we are all hopeful for?
Well, I think it's a really good question. I mean, at the start of it, the challenge that I outlined earlier is that you've got in a market, ideally what you want to have is a standard that's either enforced or widely encouraged, that all of the banks build to the same standard, because then it's properly open banking, because it means that, particularly where you've got a large number of banks, it means that as a fintech, you can connect to multiple banks easily without having to recode your software for each bank. Because that's the kind of ideal, because it's the opposite of what you have with screen scraping, where with screen scraping, fintechs have to code specifically for each bank. And also it introduces an opportunity to put much better security protocols in place. And I already touched on the OpenID Foundation's security profile. It's called the FAPI profile. So that's already a defined standard, and therefore different markets don't need to reinvent the wheel. They can just use, and should, in my opinion, just use the OpenID Foundation's FAPI standard. When it comes to the actual API specifications, they might vary from market to market, but within a country, you want to have all of the banks implementing the same standard. And if that's the case, it doesn't make sense, as I mentioned earlier, for each bank to be spending time building the same thing as every other bank.
Yes.
You know, if you're in a very large bank, you might have a large API, a large technology team, and within that a team who build out APIs. But the cost of building, even if you've got that capability in-house, the cost of building out APIs to a standard and maintaining and continually updating those APIs as the standard moves on and iterates, it's a very significant cost. It costs banks, mid-tier banks will spend, probably low tens of millions of dollars per year just maintaining that. Larger banks we've seen spend sometimes 10 times that. And for smaller banks, it's a real challenge.
Yeah.
So it doesn't make sense in a country or a market to have every bank trying to build their own version of the same thing.
Yeah.
It costs the whole market a lot of money. It costs each bank a lot more money. It costs the whole market a lot of money. And also they all get it slightly wrong and do it slightly differently. So it's harder for fintechs and it's harder for the regulator to work out what's going on and are things being done properly. So that's our firm belief, is that what we do is we offer a platform that helps all of the banks implement an open banking API in exactly the same way. It's a very standardized platform. And that, if you like, is the compliance piece. It's helping all banks comply at a low cost very quickly and stay compliant as the standard evolves over time. That's the kind of promise that we offer our customers. But we go beyond that to look at helping banks actually monetize their APIs and introducing additional premium APIs. So as we do this around the world, we've got a library now of APIs. I think we've got about over 400 APIs that cover all the different standards around the world. And some of those APIs can be introduced as a premium API that the bank can also monetize more directly than perhaps the compliance piece. So yeah, helping from a bank's point of view, it's helping banks get to compliance and stay compliant at a much lower cost and lower risk. And from a kind of commercial point of view, it's also helping the banks use that API channel to deliver premium services. But again, done in a very standardized way. So it's secure, it follows the same security profile, follows the same consent model for customers. It has the same onboarding process for fintechs, so that fintechs, it can scale more quickly, rather than what we see is big banks each introducing their API portals, having very bespoke APIs, very bespoke ways of integrating and consuming those APIs, which doesn't really scale. I mean, if you're the biggest bank in a country, it might work because everyone will come to you. But if you're the mid-tier or the tier 3 banks in a country, it's very difficult to commercialize your APIs, because fintechs won't necessarily want to come and integrate differently with each bank. So yeah, I think those are the two things: reducing the cost of and complexity and time to compliance, but also enabling the API channel as a kind of revenue generating channel in its own right.
Excellent. I think that's really something that all of us vendors can certainly help, and I think it'll kind of really expedite that journey when everyone's following a standard, or a set of standards. That just really enables people to sort of enjoy or participate much faster than if they had to kind of replicate that implementation across multiple standards and multiple different versions. Chris, I can talk about open banking for hours and days, and particularly with you, because you are such a rich resource of information and thoughts about open banking and its way forward. But I think I'd like to kind of wrap up our conversation over there. But before we wrap up the episode itself, I just want to do a very quick exercise with you, just to have some fun with a quick fire round.
Sure.
I'll give you a couple of words and just tell me the first thing that comes to your mind. Good? All right.
Go for it. Yeah.
Okay. The first one is generative AI.
Trying to think of the appropriate thing. Hype is probably the
Good, yeah.
in the short term, I would say more hype. There's more hype than reality in the short term.
Okay. Second one is FAPI.
FAPI. Security.
Yeah. Third one is banking as a service.
Misunderstood. I think people misunderstand and misrepresent banking as a service. They conflate embedded finance with banking as a service, and they are two very different things.
Yeah. Yes. And the last one is socks.
Socks.
Yes.
I've got my Christmas socks on now. They were the first ones I picked up. Are you talking about that? Are you talking about the socks you wear on your feet?
Yes.
Yes, I have my Christmas socks on. I'm not kidding.
Excellent. Thank you so much, Chris, for this really good conversation. I really enjoyed it, and I'm sure our audiences found it to be very useful. So thanks again, and thanks everyone for watching, and hope to see you in a future episode.
Thank you very much.